and welcome everybody. I am Mike Castle with StoneX. Obviously, just got our biggest data dump of the year from the USDA on Monday. So, want to dive into some of those numbers. Obviously, a lot to parse through, a lot of reports here, pretty much bearish surprises across the board. I want to focus today specifically on USDA's corn balance sheet. And I guess before we dive in here, I should say, please don't shoot the messenger, right? I'm not the USDA. I didn't come up with these estimates. I'm just trying to help you guys understand what they mean for the grain markets moving forward so we can all position ourselves accordingly. And number two, I want to keep this short and sweet. Again, I'm going to focus specifically on the corn side. If there's interest in other products, more than happy to do that in the future. But to avoid getting into too many rabbit holes here, we will go ahead and get started. All right, so diving right in here, kind of taking a high-level overview of the numbers that got released here. Starting up top here, this is our U.S. carryout. We really want to focus on these two leftmost columns, the data columns at least, I should say there. So looking at what USDA printed at 2.227 billion bushel corn carryout, that is significantly higher than the average trade guess below that 2 billion mark that you see there. And that's a common theme throughout, right? Same story for soybeans, same story for wheat, D1 stocks. Again, every single D1 stock number higher than the average trade guess. And, it's not just a U.S. story. Zoom that out to the world balance sheet as well. And again, you can see carryout heavier than expected across the board on corn, soybeans, and wheat. Again, we're going to dive in more specifically just to the corn balance sheet here, but still want to kind of touch on some of the high-level themes here. Obviously, we don't just care about one commodity, but obviously, one of our biggest headlines, one of the closest watched things is the yield side of the equation, right? And that is, again, more bearish surprises. It's going to be a very common theme throughout here again. But we saw USDA increase corn yield by half a bushel. Trade expectations was to see him walk back by 2. Average trade guess there at 184.0. Again, you see the estimate range from 182 to 186. So pretty much higher than the highest expectation, right? The most bearish guess out there was to see them hold steady at that 186.0. Easily an all-time high, right? This breaks last year's yield record by 4%. That is a huge jump. Soybeans, again, you saw expectations of a slight cut, down to 52.7, but USDA held steady at 53.0. That is also a new all-time high, as you can see, again, in those charts at the bottom there, but a little bit smaller. That's up 2.1% versus the previous high set back in 2016. So how does this compare, right? Obviously, we know what this, what these moves look like relative to trade expectations, but how do these compare to the USDA's moves in the past themselves? And we've got yield up top there for both corn and soybeans. What is the typical change from the D's to the Jan report? And what you see here is typically not huge moves, right? Last year we saw a 3.8 bushel an acre cut on corn. And honestly, I think that move alone is kind of part of the issue that we've seen this year. I think USDA kind of cut too much, maybe understated the size of last year's crop, and now they're having to kind of make that up for bigger production in 25, 26. Don't need to dive into that. That could be a rabbit hole of its own. But you can see that half a bushel an acre move up, that's really not a big move, right? It's just because the market expected to see a drop. That's why this feels so bearish. And obviously the fact that it gives us a record crop by such a large amount, huge production that comes out with that, right? You see the production figures there at the bottom. That's really the one thing that stands out there is that 269 million bushel jump in corn production that we'll dive into in more depth here. So that big jump in corn acres, obviously, half a bushel an acre, jump on the yield side of things isn't that much, but they added, 0.1 million to planted area, and then the big one was the 1.3 million added to harvested area. This puts our corn acres that were already at their highest since 1936 even higher. So just kind of putting that into context, that chart there, bottom left, showing the last 100 years, how much corn we planted here in the States. Obviously, this year is a huge anomaly to the upside. And you can see what that does. That bump on the harvest side of things kicks you up to a 92.4% of planted corn acres getting harvested for grain. And honestly, I do think, part of that too is also a function of higher silage yields, right? You don't need as many acres. But the big question here is, what exactly are we doing with corn acres, right? So we're at 98.8 million. That's gigantic. And it's not just, all of a sudden we've got this, right? There's been this steady increase since the June acreage report. We've seen a really big jump. But more specifically, I've been following this right here. What I'm showing you is the change from FSA incorporation to final acreage numbers here. And they used to do this in October, but now they started doing it in August last year. So maybe, obviously when we first saw this back this summer, maybe this is something to do with the fact that we're now incorporating in August instead of October. Maybe that's why this looks like such an anomaly. But throughout the year, USDA has just continued to kind of every report or so, not every single one, but they've just continued to increase acreage to the point that they've now added more than 1.5 million planted acres since incorporating those FSA numbers. And the thing is, you can't really argue that this is trying to match what FSA shows, because FSA, even now in January, is at 97.4 million. I just told you USDA is at 98.8. So maybe that means, excuse me, that USDA is, assuming some percentage that doesn't get reported. So let's add that to it. But the thing is, they didn't add the same percentage as FSA. This is not steady. If you go back and do it month by month, again, nothing really matches. There doesn't appear to be any specific reason they're doing this. But since August, the FSA, we've seen 875,000 corn acres added. That's up 0.9% from what they published initially in August. USDA, though, again, has added over 1.5 million. That's up 1.6%. So look at it graphically. Again, you can see the 11 years prior to this, the average was for some pretty small changes, was for a reduction of about 365,000 acres. And then all of a sudden this year we blow up by 1.5 million. So that adds a lot to the production side of the equation, which means very, very big corn supply, right? We're above 17 billion bushels for the first time in history. This is a massive corn crop. But the supply side of the equation, now that we've hit January, we shouldn't really see much of any changes moving forward. And I say should, but we did also get some weird backward revisions that I didn't put on here. Again, trying to avoid the rabbit holes. But USDA did raise the 24-25 crop by 25 million bushels on yesterday's report. They made some odd stocks changes for for June and September as well. But let's look at the demand side of the equation, okay? Those big supply numbers, again, I throw this on here at the right. You see both ending stocks and carry out to use now at 7-year highs, dating back to that 18-19 marketing year. But taking a look at the balance sheet itself here, diving specifically into the demand changes they did make. Only 2 increases that you see there on the demand side of things. That's adding 100 million bushels to the feed. And I should point out, that's also feed and residual. So that is kind of USDA's category where they can do a bit of a catch-all, or if they're trying to, fix some prior mistake, which it would be my own, I guess, tinfoil hat theory here, is that they're kind of overstating residual demand because they've got to figure out what to do with all these bushels from last year that they're now showing this year. Export side of things, they left alone, same with ethanol. The other industrial, they did cut by 10 million bushels, but really the big one that's kind of a head scratcher here still that I thought they would address on this one that they still haven't is this now record high feed demand. By doing, that 100 million bushel increase, they've now bumped feed and residual up to 6.2 billion bushels. So zooming this out back to about 1990, we're looking at the highest corn feed demand on record. Okay, that breaks the 6.132 record seen previously, and it's very hard to think that this is anything but incorrect. USDA is now showing a 13.7% year-over-year increase in corn feed use. Cattle on feed, as of DS1, from the cattle on feed report we just got here, was down 2.1% year-on-year. Obviously, beef is not the only livestock sector that is consuming corn, but they are the biggest. So anytime you're seeing a situation where we're feeding significantly fewer cattle here, with many more of those being fed in Mexico, with the border still being closed due to the New World screwworm issue, that's also driving that record export demand. Again, you can't have it both ways, right? You can't be feeding record amounts and exporting record amounts to Mexico in order to feed them there, right? It's kind of double counting them. So that's why we've been following this for quite a while here. Thought this would be the report where we saw USDA cut yield and then use that opportunity to offset that decrease on the supply side of the equation with some softer demand, specifically in the feed category, to kind of still end up with ending stocks somewhere, in that low 2 billions kind of mark that they've been wanting to hang around here this year. So switching over to the export side of things, again, I alluded to this already being a record at that 3.2 billion, and you see how that compares to years past. We just set a new record last year at just over 2.85, and obviously are beating that pretty convincingly here this year. So that begs the question: why would they not just increase exports instead of feed here, right? If you want to, offset the blow of raising the supply side of the equation by this much, why wouldn't you have increased the 100 million bushels to exports? You can say what you will about sales paces slowing down eventually here, as Brazilian stuff comes off. But the thing is, you can justify this, right? You're talking about it right now. You can justify a move in exports much more easily than you can on the feed side of things. So our cumulative export sales, now that they're back to being caught up, are just red hot. Same with inspections. And I put it two ways there on the right. So our corn export inspections to Mexico, you see that yellow line on top. That's where we sit today. Purple line there below it, that's last year, which was a record. We're now breaking that significantly, again, because of all these cattle being fed down there. And you can see how our cumulative export inspections, which actually left so far in the marketing year, compares to years prior. It's up 60.5% year on year. It's easily an all-time high. It's up, nearly 45%. Versus the seasonal pace needed to reach that 3.2 billion bushel export target. Sales are way ahead of schedule. So again, even if you would be kind of bearish exports right now, you can't really argue that this is hard to justify today. So it really makes no sense to me why they did this on the feed side instead of exports, because eventually they're going to have to address this, right? And that's the concern moving forward into 2026. Is now that the supply side is locked in, we assume it's locked in, I guess I should say, disclaimer there, given the fact that we're kind of seeing some unprecedented moves from USDA. It does feel like you're going to have to kind of get used to a heavy corn carryout here in 25, 26, barring some kind of, unforeseen major black swan event. Okay. And we'll kind of touch on that on the next slide. But this kind of gives you a comparison of, where we sit in terms of both ending stocks on the left and then carry out to use on the right, compared to USDA's average farm price that they publish here, which, side note, they did increase it by 10 cents a bushel, even though they printed such a bearish report. That was kind of interesting. They now have it at 410. So if we go back to the last time we saw ending stocks like this, again, that'd be 1819, almost identical to where we sat there, and the average farm price that year was at 360. We're 50 cents higher than that, here today. But obviously, if you looked at this at an inflation adjustment, that would actually feel kind of low. Carry out to use, again, you're looking at 13.6%. The last time we were that high was in 1920 at 13.7. Average farm price that year as well at 360. So this does feel like a very, very bearish report, right? Again, the supply side is exceedingly heavy. You're talking about record production. They're now getting to these high stocks levels that could potentially, again, kind of get worse, get into those mid twos, especially if you see them eventually make those adjustments that we would assume is necessary to the feed side of the equation. You could be talking about a few 100 million bushels there. So I don't think it's unrealistic to see ending stocks get up to 2.5 million or higher. That's not to say it's going to happen, but obviously here we sit today at above 2.2, and it feels like the risk on the demand side is kind of lower at this point because of that feed number being overstated. But with all that said, I don't want to be all doom and gloom. Again, that's not my goal here. But what could turn prices around here in 2026? Let's start with the supply side of the equation. Elsewhere, obviously, that's where we're always rooting for growing issues is somewhere else, right? So Brazil's safrinha crop, that's their bigger corn crop. By far, that's their second crop is what it's also referred to as. If you see issues there, again, I don't know that it's going to have that big of an impact because I don't know how much that's going to ration more export demand to the States. You could see reduced exports from the Black Sea. Obviously, we continue to see escalations between Russia and Ukraine in terms of hitting vessels themselves, along with Russia continuing to target ports. And, we've seen some more, significant upticks there. Obviously, the markets have become pretty numb to that, given the fact that we're, now nearly 4 years into this situation. And Ukraine's proved extremely resilient, being able to export through the Black Sea despite the war going on. The other big thing I would say, and that's why I showed this chart of the new crop soy corn ratio for this year versus last year at the bottom is maybe the potential could be a cut in corn acres, right? Maybe we could see soybeans trying to buy acres away from corn because of how bearish this report just came out. And that's not to say there aren't issues on the soybean balance sheet itself either. But again, I'm trying to avoid rabbit holes right now. And again, spring or summer weather scares, right? Typically, your seasonal peaks are in May and June. On average, right? That's not to say we can't put in the high in any month. That's certainly on the table, but average, peak in the corn market is made sometime in the late spring, early summer, because that's when our weather risks are the biggest, right? And, you could see some kind of pop from that. But again, we're looking at very, very heavy fundamentals here. So what about the demand side of the equation? One of the biggest things there, I didn't really touch on the ethanol numbers. I could have dove into that in more depth as well. But if we were to see the EPA come out with more favorable rulings for the ag sector here, pushing something like an E15, I added on there even bigger support for the soy-based biodiesel side of things that incentivizes that acreage shift that I'm talking about there on the supply side of the equation as well. Could we see more support on the soybean side of things, incentivize more domestic use there, and incentivize more planting to the soybean side of things? Again, that would cut into the acreage on the corn side of things, presumably, and then kind of help ease some of these burdensome stocks. Even bigger export demand. Again, we're already at a record, but that doesn't mean. We're already well ahead of the pace needed to reach USDA's current target at 3.2. So even with our existing destinations, I think we could move past that 3.2 number. I don't think it's unrealistic to see another 100 million bushels added onto that. But the biggest potential outlet would be China, right? We're selling soybeans again. They're getting close to that 12 million ton mark that they promised to buy from us here this marketing year. It's a story all in itself. But there's been some smoke about their corn stocks. I think that's really, they have drawn down here in recent years. The USDA did just jack up their corn production number for China to match what China just published not long prior. Yeah, which is massive, right? So it doesn't seem that they need these big corn imports. But again, if it's something for their reserves, we could certainly see them come in. I'm just kind of grasping for straws at this point, right? A lot of this is very bearish. Try and at least find some potential bullish stories out there. But another big one there, I throw in this chart for the ethanol blend rate, topping 11% in October for the first time on record. It's a big deal, right? You've seen some state level pushes for E15. Obviously, it's a big topic from farm groups, things like that. It's something we would love to push for, especially when you see other countries like Brazil pushing for much higher ethanol requirements. You see other countries doing a similar thing with soy-based biodiesel, that kind of thing. There is potential for support on the policy side there. And I should say, there's also the bearish potential from that. What if we get more bearish rulings from the EPA? What if they're less supportive for the ag industry? In favor of the energy sector more. A lot of unknowns here. It's been a very interesting past year. 2026 looks to be starting in a similar trajectory here. Obviously, a lot of geopolitical uncertainty. And then, one thing that isn't on the supply or demand side, but from a money flow perspective, if you were to see, funds kind of buying back in, that's another thing here. Funds typically like to get long the commodities during times of inflation. Obviously, recent inflation readings don't look so bad, but if we were to see less Fed independence, and more inflationary pressure show up later in 2026, maybe that brings some more of that spec money back into the commodity sector, even if the fundamentals don't actually look bullish. It could drive things up on their own there, but a lot of unknowns, a lot to get through here. Again, I'm already making this longer than I should have, but hopefully you guys enjoyed. Please feel free to reach out. Please feel free to check us out on StoneX.com or go follow me on Twitter. I should say X at Mike_Caswell2. But thank you all very much. Looking forward to an exciting 2026 and best wishes.